Holy cow, Japan.
What? You just looking at it now?
I'm just looking at it now.
Okay. I'll give you our view. I saw that he wrote a little bit about it yesterday. So we've been pretty long that for a while now. So it
Good for
is
you.
what, the 10th of February, 2026. We have Robert Marson. We've got Kevin Baker, Nadine Turman here for Wall Street Beats, powered by Passes. It is Tuesday, but it's a rockin' Tuesday, and we're going to cover ground here. I'm going to start with you, Robert. Robert, what are we going to talk about today?
Well, one little company that I keep buying, and I'll find a bottom in this yet, Batesy. If anybody buys this stock here,
Yeah,
and I get my first purchase price, they'll make about 70% on their money. So that's not bad.
wow.
I normally get even. It's like Bakesy, it's like what happened with Weatherford. It went 135 to 80. I bought it. It went to 40. I bought more, and it went to 100. Now, I took a break even because it didn't have the growth I liked. So I sold it way too early, like a knucklehead. I bought it with a bad chart and sold it with a good chart. So I totally butchered that trade, but I'm not going to butcher this.
You're gone in Weatherford?
Yeah, I've been gone. Yeah,
I
said that.
I didn't know that.
Yeah. I mean, I had 40% of my liquid net worth in energy. I had gotten way overweighted energy.
All right, point taken.
Okay. I had to scale it back at some point. So I needed money for semiconductors, my friend. I had too much energy.
So, don't we all? Don't we all?
So the first stock is it went to pound the table status. That's SimilarWeb. I bought more on Friday. I told my brother to buy stock yesterday, and I would guarantee he broke even for up to 10,000 shares. Come on, that's conviction, guys. When you'll backstop
which stock are you talking about? And what symbol?
SimilarWeb, SMWB, the data as
SMWB. Sorry, okay, gotcha. I'm on the same page.
So I've been doing more fundamental research, deep dive into the business. They sell data. They have more data than any other company in the world, except Google. I've heard it said by analysts. So obviously the company has said, and that would mean that Facebook's behind them. And I don't know about that. I would think Google and Facebook are two companies that have more data than them in the world.
Yeah.
But they sell data, and dealing with large reams of data is a very tricky, complicated matter. Data scientist, a buddy of mine that started a SaaS company about 10 years ago, said, it's a very arcane field. It's highly specialized knowledge, literally just accumulating and processing and analyzing that data, cleaning it up, making it worth something is a very complicated task. These guys have been doing it for 20 years, I guess, 15 years, something like that. The customers love the product. They get high ROIs on the product. We're in a world where if you service a data center, your stock is going crazy up. And what's more important to a data center than data? Without the data, it's just a center. What's a center worth?
Big thoughts from David to this morning here.
So you got to have the data, and these guys have more of it than any maybe two other companies in the world. So they happen to sell it as a service. So they don't give you the data. You subscribe to the company to get access to their data, and they deliver it automatically over with to your APIs. So they're not selling disks of data, and most of these purchases are multi-year contracts where they have an ARR, an annual revenue run rate from data. Yeah. They have a very high client retention rate. They actually upsell their clients a lot. It's a company that seems to be benefiting from AI, and multiple clients said that in the reports that I read. And yet, because it's covered by software as a service analyst, and people say it's a software company when it's not. It's getting crushed in the SaaSmageddon, they call it. And so I don't know if you guys heard me say this, and I'm a knucklehead. I'm not shorting SaaS companies. But over a year ago, a company that's very internet forward, or very technology forward, called Klarna. It's a European pay-as-you-go
Sure.
company. They recreated CRM, Salesforce.com capability, turned off Salesforce. They also recreated either Workday or ServiceNow. I think it was Workday features, and turned it off a year ago. And I said I would not own a SaaS company a year ago. Was I? And they're at 5 and 10 times sales, right? Was I smart enough to sell them? No, I was an idiot because I didn't see anybody. I didn't see anybody else do it. I thought it was too hard, right? So I sort of said,
Yeah,
well,
right.
maybe.
Also, you could have ripped in your face till you got here, so you had to
Yeah,
pick your point right, right?
right. So that's not what scared people. What scared people a couple of weeks ago was, I think it's Anthropic, right? Announced. I read this. I haven't confirmed this. This is what I read happened. They downloaded 11 plugins that each of which handled a specialized service industry, like accounting or taxes or legal or human resources or
Yeah, it was Anthropic. Yeah.
sales management, right? And I read it was priced at $20 a month for a seat. So there you go. So that if that takes off, it's not that each company needs to do this. One company is going to do it, and it created a SaaS business to destroy the SaaS companies that charge 10 times that, right? 20 times that per seat. So you don't want to own SaaS companies. I don't own a SaaS company. I own a data as a service company, not a software as a
Right.
service. So it's $4.67 when I bought it on Friday. It's one-time sales. There's a buck a share in cash. There's no debt. It has been growing, and I would continue to expect it to grow because they say the AI companies should be their biggest customer in 3 years. So they say AI is $1 billion TAM that didn't exist 3 years ago for them. They're only a $300 million company. So I think this could be, if AI turns out to be a benefit to this company, this could turn out to be a 5 or 10 bagger and one of the most misunderstood beneficiaries of AI in this whole AI
So
movement.
what work are you doing to make sure of that? That's going to be, I think, a natural question.
No, you can only accumulate as much data on the company and its product and its customers and its competitors as you can. And that's what I've been doing. I've been scrounging for research reports, analyst reports, company presentations, expert reports, commentaries, trying to find people in the industry I know in the software business. I've asked them to look guys that I know that own software
Yeah.
companies, to look into the quality of the product, the efficacy and value in the product.
Mhm.
I mean, this is all contingent on one thing, that some AI-led company startup can't recreate the data in 6 months or 6 weeks or 6 quarters, right? If somebody figures out how to replicate this company's business model with AI, then the product is going to be devalued by 80%, and I'll be wrong on the stock. Of course, that could happen. This company's product could be obsoleted. Not that the data would ever be obsoleted, but the business model, the price would be obsoleted. Yeah, that could happen. But but that's why it's one-time sales. They had a competitor being bought out at 3 times sales. So this is ridiculous. It's absurdly cheap for 80% growth margins and double-digit growth. I don't think you guys have ever owned a company with 80% gross margins and double-digit growth. Trust me, not many exist. I never have. So I owned it at one time.
Hey, Robert.
Yes.
When does the double-digit growth kick in? I mean, I'm looking at this last quarter; it's flat. And then these last 3 quarters prior to that are down. So, is it starting to grow in 7 days when they report?
No, their last quarter was 17% revenue growth. I don't know what you're talking about.
Revenue growth. Okay, it hasn't made it to the bottom line. Okay.
You don't have any earnings, buddy. Now here's I could talk to earnings, okay? Because this is a very important deal. This could be a monster stock. Put up Belfuse. It could be BELFB all over again. Casey Bakes. Sorry.
Who's
The
Casey?
I like Casey. I like Casey. You're my Bakesy Casey. That's what I'm going to call you now. I got a new nickname. Bakesy Casey.
Yeah, that's going to stick.
Yeah, until you're in the same room together.
So if they grow, but BELFB, yeah.
Okay, there's two classes.
Yeah, B's good. The last time I got this crazy, insanely over a company that was misunderstood and mispriced was Belfuse at $12 4 years ago. Okay, this is insane. This if it works, if it doesn't work, then I'm gonna get my knees chopped off, and but they can make $1 a share in 3 years, guys, and it's a $4 stock. So if they grow 15% a year for 4 years to double the business, make a buck, they'll trade at 25 to 30 times earnings because they'll be an AI winner by definition. If they're an AI loser, they can't grow, and
what's the moat to having data? What's the moat to having data? Try to maybe explain that to folks.
Yes,
why can't someone else just start collecting data? What is it that they have that the other people can't collect it?
Absolutely. Did you put Belfuse up there? Did I see it?
Yeah, I was sending you your flowers.
Okay, well, 12 to 240s, 30s, not a bad.
Yeah, but we're not talking about that. We're talking about your current.
Anyway, I'm giving you a comparable in my mind.
Right,
this is how.
Right.
So the moat is that they have 4 sources of data, and 3 of them are proprietary. Now they don't say how much value is in and what percentage of the data and the value of the data is proprietary. So they don't want to give that for competitors.
What kind of data is it?
A lot of it is sales data. They say they touch 5 million websites and in hundreds of millions of computers and cell phones, and it's probably carrier data and internet access data. So it's click-throughs, it's purchases, it's searches. They say literally the 1 to 2% of all internet touches, not searches, touches, they see in their data sourcing process around the world. So they see 2% of all, 1 to 2% of all internet traffic for everything. So,
all right, well, that's what you're going to have to figure out, guys.
That sounds like
is there a moat on that data?
Yes, that's the $1 million question. Is there a moat on the data?
Yeah. It could be more than $1 million question. All right. Anything else on that, Bakes, that you want to ask our friend here about?
No, I think it's going to be a fascinating conference call. They report next week according to my system, and I'm sure Robert is going to be the first in line unless they block him because his charm offensive was inadequate. But he's going to ask all these questions, right on the call, and we'll see how they answer.
Yeah. Well, we'll just see what the numbers are for. This is going to play out in the next 4, 6, 8 quarters. And if the numbers are good and they grow, the stock will 5x, start an argument. And if they start shrinking, then I know the data moat was not that deep or wide, right? It might have been a data
water. There was no water in that moat then.
Yeah.
No, you know what the moat was? It was a puddle.
A damn sponge. Bugs Bunny.
Yes. The other companies I did want to talk about, I opened a file, and I'm not a big finance guy, and I'm not a big fintech guy, but that is, PayPal. PayPal's one of these expensive companies that people loved for 10 years because they created
until they hate it.
Until they hate it, and now it's back to where it was 10 years ago, and it's a piece of shit, and blah, blah, blah. And, I don't know. It's awfully cheap. They're buying back a boatload of stock. They're going to buy back 10 to 15% of their stock at this price is for this year and next. So
look at this thing.
Stock back.
Yeah.
And, it's down to 8 times earnings. And, it's not growing a lot because there's a lot of competition, nipping at their heels. There's been a lot of new pay services. They're sort of a little stodgy, I think, and have been. But they changed the CEO. They brought in a new CEO, and management change, generally causes positive things to happen in the income statement, if only for a temporary reason if the business flaw has been execution and not strategy. So the new guy will come in, change strategy, light a fire under the salespeople. They do more deals, get more deals done. They'll sandbag the numbers, which they apparently did. They sandbag the numbers, I believe, and a new CEO coming in always does that. If you've been doing this for 42 years, as I have, you've seen it over and over again. So next quarter, suddenly, or 2 quarters from now, we're going to be beating and raising because they sandbag the outlook so much. So, I'm probably in here going to buy a starter position, and
right.
and determine whether I want to make it a real position or not. I know other people have mentioned it on the site. Ben likes it. Some other people have talked
Yeah.
about it. Maybe we should get Charlie to talk about it as a fintech, a payment
I
processing
don't think
company.
he looks at this one, but yeah, go.
Yeah, he does more banks and credit.
Right.
Credit, right?
Yeah. Yeah. Um, Bakes, what do you got today?
I am. I'm getting more bearish Bitcoin, which is hard to imagine. And so I've got three
Why?
Bitcoin things to talk about. This is Grayscale Bitcoin Trust, which is the way you could own it way back when. When if you didn't want,
Yeah.
want to do a wallet or what have you,
Yeah.
and this is, this is just a long term picture. Uh, there are many ways to participate in Bitcoin. Back here in 15, 16, they were the only game in town. Well, now you've got
Right.
all kinds of competing ETFs. You've got MicroStrategy. More on that later. And I guess what strikes me is this is I'm calling this a Garfield bounce. This is the deadest of cats. This is
Okay.
lasagna filled cat bouncing, and it can't catch a bid. I mean, it is. Look at the volume on the down days, and look how feeble this rally is for 2 days, and now they're fading it anew. And reason I bring this up is I think there's a lot of our members that have dabbled in
Trade it.
Bitcoin,
Yeah.
and
I
so
did. I
yeah.
bought it on the low because it was, and it was up at 10% in a day. That's a fast trade,
No, I mean
but it's
that,
a
that
trade.
that's great, but I mean this is why I like a longer term perspective. I mean,
Yeah.
I think that this bounce is just that. The chances of this going up and eating through this resistance at 60 to 80 anytime soon, I think, is virtually zero. I'll never say never, but this, and I'm listening to all the Bitcoin podcasts, and they're just trying to find a way to come up with a narrative, and they're out of narratives. I mean,
Yeah.
there's just it's over. And I've owned this, I've traded it, I've made money with Bitcoin, but I was never a hodler or a maximalist. And the market is telling you, and bank, by the way, the sell discipline got you out back here at 80 plus. This now obviously it doesn't correspond to the Bitcoin price. We're at 68 or so when I signed on to the show, but if you own Bitcoin and you think this is the way to riches, and Kathy Wood is right, I strongly disagree. Because I don't know what market you're looking at. And tell me what the catalyst is going to be. I don't hear one. I don't see one, and I'm willing to change my tune. But
Do you smell
the
one?
fact that this, sorry,
Do you smell one? You're using all your
yeah,
senses. You don't see it. You don't hear it. You're out. You're out of this thing. So, if somebody bought it, then should they sell it now?
if I was on the long side, I'd sell to the sleeping point. And if you're sleeping soundly, then I just question that. I mean, we haven't even, if and when you really hear about forced liquidations, then you're not going to have time. And if that's all the bounce they can create, everybody who has an interest in this is saying, you know what, the narrative's over. I'm done. Get me out of here. And oh, by the way, pull up my Bloomberg. Where does MicroStrategy have to sell stock, to meet the preferred dividends, and if they ever have to sell Bitcoin, then I mean that's a game over.
Yeah, you're done.
Game
Yeah,
over.
that's flushing it with liquidity.
Okay,
Right.
so here's BITI. If anybody wants to short this, it's a little extended over my preferred point. I try to stay within 5% of breakout points, which is at 26.21. In this case, it broke out of 24.97. This line that you see here, but this is obviously inverse, and this is there's all kinds of negatives. It's futures based. It's daily resets. So I mean, it is far from perfect. It isn't shorting Bitcoin, but it's. I mean, look at the volume here. It there are people that really want to have this go down. Here's the long term BITI. I mean, look at this. You can retrace whatever Fibonacci ratio you want, 0.38 or half, or 0.618, and you're going to make a ton of money as this thing ascends, retraces this decline from a high of 225. Here we are at 27, down 90%. So if someone, I'm circling the wagons here. I haven't pulled the trigger, but it is clearly a candidate for a top 10 as I go through. Literally now 5,400 ETFs. They just added another 100, and so 5,400 ETFs is what I'm doing over the next couple of days. So stay tuned here, and I'll come up with what I'm doing next. Last but not least. This is winter, new as in crypto winter, and this is shorting MSTR, yield max MSTR, short opportunity WNTR. Okay. And I can't do this, full disclosure. I tried to be cute with my wife's compliance department. I'm not short the stock. I'm short. I'm long an ETF. Well, they said, nah, that doesn't count. So full disclosure, I can't do individual names and I can't do single stock ETFs. But if this breaks out above 40 again, then I think that Saylor's going to have a very, very bad 2026.
He's already had a bad 2026. It just get worse.
Yeah, and
go ahead. Go ahead. So you're saying go short. Don't just get out. You're saying go short.
I'm not doing that yet, just because of my quirky. If it pulls back to 26 under 26.21 for BITI, then I'm short. But okay. I just gave you three examples as to why I think the preponderance of the evidence is that this is going down. So it's gone down a lot, but can it go to zero? I don't know, but I'm willing to find out.
All right. Well, I'm gonna pitch today. I don't usually pitch because the moderator, is supposed to moderate. But David was talking about Japan yesterday, and we're big Japan investors. So I figured I would share a little bit more information for those who might have found it interesting, because it might not be on everybody's radar. But just broadly speaking, this week we've got one of the most consequential macro data clusters of the year, right? You've got January prints. They'll probably show a misleading combo of firm headlines, soft undercurrents across labor, inflation, consumption, financial conditions. But, you also have a mix of global politics, whether that's the UK instability, global policy clarity, which I'll talk about. That's Japan's new supermajority, and other sector-specific dynamics, whether that's memory tightness, software washouts, AI stuff, as you guys were bringing up. So there's more asymmetry. It's a stock picker's market. So try to pick things that are more popcorn popping, right? So Japan gave you a pitch. But I'd say Japan right now is a little bit more about mandate, momentum, and credibility. So if we start with politics, you've got the new PM has a clear pro-growth mandate. What does that mean? Well, the first times since the LDP was founded in 1955, that party now holds a 2/3 supermajority on its own in the lower house. So instead of some kind of fragile coalition, she's got full control. So she can do things, right? We know what happens when you can do things. And for markets, that really means policy continuity. That means lower political risk and a much cleaner execution channel for stimulus that she's targeting, especially across AI, semiconductors, and defense. while you can keep expecting the corporate governance reforms that began in her predecessor's term. So you saw markets respond. Japanese equities surge, record highs. I know before people came on, you were like, "Oh my gosh, you'd missed it, right, Banks?" It's like there's strong breadth and leadership right now under the hood.
Yeah.
So that's maybe different from here in the U.S., right? And if you look at it, Japan has now outperformed the MSCI ACWI index in both local and U.S. dollar terms since she became the LDP leader. And the country really has a structural leverage to the global AI capex boom. Whether you like it or not, it's going to benefit when people are spending money, and that's projected obviously at 650 billion this year, and to the ongoing memory supercycle, which is driving demand for their capital goods, materials, testing equipment, robots, all that kind of stuff, right? And so if you look at earnings in Japan, they currently have the most earnings upgrades of any major region. So for the first time in 7 months, it's even beating the US on earnings momentum. We can put up a chart there. You can put up the first chart, Jen. And this is broad based, it's not just tech. So 14 of 22 sectors have outperformed global peers. Banks are a good example. They actually started at a price to book ratio below one. They benefited from a steeper JGB curve, and it still only trades about 1.3 book, with earnings set to improve. I'd say that foreign investors are coming back. Net buying's picked up meaningful, still below the 2023 peak, but clearly turning positive as allocators tend to chase momentum and policy clarity. So let's put the next chart up, Japan, on Japan. That was earnings revision. So everybody's doing it higher. And then the next one is relative to performance. So looking at their sectors versus other sectors. And for the most part, their sectors and industries are doing better against their global peers. And so, I've talked about before, I write about it a lot, how there's a lot of initiatives on ROE, ROIC, ROA, there, reduction in cross company holdings, there's more dividends and share buybacks. It's really a government, I'd say, supportive initiatives to make Japan a more investable place, shareholder friendly. So you have a lot of that going on. And foreign investors are coming back. So the net buying's picked up meaningfully. Again, we're still below that 2023 peak, but they're coming back. And the big question, so like what could go wrong, right? And you can take that off the chart now, Jen, is that, bonds and FX. So this is really the first stress test. The 10-year JGB yields are near 2.3%, yen hovering in mid 150s. Some people are worried about upside risk towards 160 if the fiscal policy is front loaded. But, ASR actually put out a really good piece this morning showing how Japan's balance sheet matters. The net financial liabilities are just 74% of GDP, which are far below the US or the UK. And the central government's all in deficit is only about 2% of GDP. So add into that, like that sprinkling signals of funding discipline, and no new JGB issuance for food tax cuts. And the base case is more stability and not disorder, which is really what people were freaking out a few weeks ago. And so, if you're like, is Japan rallying on hype? No, it's really just being repriced on a mandate, earnings, balance sheet credibility, and a global market that tends to be short on these things right now. And so that kind of combination travels and liquidity follows. And that's one of the things, I want to look at. And if you do want to talk about, what could go wrong, if they front loaded stimulus a lot, which I think that they're not going to do, or accelerated a ton of defense and, constitutional signaling before telling people how they're going to get that funding, it's going to reprice the term premium. So your JGB yields would go higher, the yen would weaken a bit, um, and people would have to be more reactive. But I don't think equities collapse. So that's the difference between if you're freaking out about currency and bonds, I don't think equities collapse in that. They're just going to bifurcate. So if you do want to do a little bit of risk management, I think defense and semis would continue to work. Maybe domestic rate sensitive sectors could lag a bit. Foreign inflows might slow for the time being and volatility could go up, but it's a policy credibility problem, not an earnings problem. So that would be an entry point if you weren't in it. But I think about the upside case, and that's mandate and execution. versus the risk case, which is about timing. So if they get the sequencing right, and I think that they're focused on that, this rally could extend. And if not, the market's going to force discipline on it through FX and rates, and then equities could work. You're going to get a second bite at the apple. So that's my pitch. And I know Bakes, I gave you. We are also into small cap there, right? Because small cap has an easier time doing a lot of these governance initiatives, and so maybe take a look at the two ETFs I gave you, Bakes, and tell me what you see on those. As a lot of people here can't buy local, we tend to buy local for our big institutions, but for our families who just like their USD positions, we do buy ETFs. So I know that yesterday David said, oh, he wants individual positions, but we're just as happy for people who can't do that to have bought the market. So can you show us what you see technically?
This is SCJ you're referring to, the
Yeah.
MSCI Japan small cap.
Well,
I mean,
WJ
shame.
is the big one, and then SCJ is the small cap. Yeah.
Yeah, I mean, here's small cap SCJ. I mean, it's terrific, and I guess I have to do my walk through 5,400 ETFs more often
Granularly.
because I do it every month, but apparently I was asleep at the switch on this one, which is sad. I like
It's
it,
your
but it's extended.
Valentine's gift from me. This is your Valentine's gift from me, Bakes.
Yeah, there we go.
Small cap Japan.
It looks like an absolute champ. I wouldn't buy it here because it's way beyond my the 5% of the breakout that I mentioned with Bitcoin. You see this blue area here. I'd like to buy it. I'd like to be able to dunk a basketball, and I'd like to weigh 205 pounds. So it's about as likely. But this is my ideal buy point here, and it's blown past that, and I doubt you're going to see pullbacks to 94.73 on the small cap anytime soon. But good for you. I mean, it's an absolute champ, and I've been reading The Economist, and they've been really bullish on this election, and I thought all that was priced in. I thought, her call for special elections and solidifying her power, I thought that was all baked in, and I'm wrong because you can see the stock continues to go north. And, I guess, as always, don't underestimate fund flows. When people say it's safe to allocate to Japan again, and they stop invoking 1989 and Pebble Beach purchases and what have you. It's great, but extended, and good for you guys for getting your clients in it. And I'll wait for pullbacks.
Right.
I need to know where you got in. I need to know where you got in.
Way earlier, so I don't want to make you jealous. So I tend to not talk about these things. So we've been long Japan broadly for over a year. So
Good
it did well
for you.
last year. Yeah.
Good call.
And then
Good for you.
small cap Japan for many, many months now. I would say the
I have
fall.
a Japanese opinion. I have an opinion on Japanese companies because I've followed
for
them
it.
for 4 years.
You hate them?
And in general, yes. I've never bought one, but I can tell you. But I've analyzed many. So there's one thing going for Japan that I think is maybe it's playing out with your governance issues. Yeah. Japanese companies are some of the least profitable companies in the world, and they have very low.
Changing. Yeah.
And yes, and they have very low price to sales ratios because of that. So there's a lot of margin improvement in Japan.
Oh yeah.
And if these companies execute there, even though someone told me the market's about 25 times earnings, it's all for very depressed earnings. Yes. So if they really do restructure the economy and become more profit and shareholder focused, this could be a very long cycle.
Yes. Yeah, that's where I would tell you, Bakes, that you're gonna have to look back on the technicals, and that's the key difference. So when I wrote, I guess a little note to David's note yesterday on the public chat, that's what I put in, is that you have to take a look at all of the initiatives, and they're not done yet. Certainly some of the low-hanging fruit has been done, but people are still unwinding cross holdings. They're still, adding dividends and share repurchases and looking at cash flows. And so it's a completely different, Japan is not Japan, right? Japan is not the Japan you invested in 10 years ago. Japan has a really different mandate, and the government is telling people you need to do this. And so the reason why do I like small cap, there's obviously an element of industry mix in there, but there's also the fact it's a lot easier to get things done in a small company, and a share buyback or something can have a much greater impact quickly on that small company than these big companies that have a lot to turn around. And so that's one of the reasons why, like, we betted on both. So we had kind of we have a double allocation. So you didn't have to have small caps win. But when you look at, and we have a lot of friends who are activists who have been active over there for a while, that they don't have to do as much anymore than they used to have to do to go in there and really kind of try to convince a board to get things done. It's now, a homegrown initiative to make Japan more interesting to people. So you look at all of that, you look at the fact that and if you have some more clarity on the China-Japan relations, because right now China doesn't know what to do with Japan because Japan is friends with the U.S., you could really see Japan being a multi-year, in addition to last year, beneficiary of tech, of robotics, of energy, of defense, like so many different things. In addition to just the now that they have inflation, guess what happens when your rates go up? Japan has a ton of treasuries. So they sell things and then they bring the capital back home. So you don't just need international investors to bring capital back home, but you have homegrown capital that's been sitting abroad, especially sitting in the US, that gets to come back home and earn higher yields. So there's lots of reasons why I think that Japan is interesting. And if you just look at the short-term chart, you'd be like, yeah, maybe I missed it. But it's something to think about when there are pullbacks, because there always will be pullbacks. Thinking about this as a more intermediate to long-term play that you can be watchful and not be worried as much. That's my thought. Unless China invades Taiwan, then everything's going down. But that you got bigger problems if that's going on than just Japan. Yeah.
Yes, for sure.
Good for you. Great
as
call.
the moderator. Yeah. My pitch is moderator. Yeah. So, all right. Well, listen, it's 7:40. People need to get to work. Thank you, Robert. Thank you, Bakes. It's Nadine here for Wall Street Beats, powered by Passes. We went everywhere today, and that's a good thing because not everybody invests only, in one sector. So hopefully something was interesting to you. Come back tomorrow for new ideas, and always check out the chat for what people are writing. Take care.
Thanks, guys.
Thank you all.
Bye-bye.
Thank you, Jen.